So what's the correct way of actually drawing a order block? All right, lots of traders like to call them supply and demand zones like I do, but there's no difference. They're the same. Now, people do, or traders like to draw them differently, okay? And some people have a hard time actually spotting an actual order block on the charts. They have questions as in reference to what am I looking for? How do I locate a proper zone, or one that is a high probability order block versus one that is a low probability order block? So let me show you today from experience and from just my own perspective and view of looking at the markets and the charts. Here on the NASDAQ futures, I'm going to show you a couple order blocks that I have marked up. This is off of a higher base chart, the 120 range. I trade range-based charts, and that's how I go about, locating or finding these zones, okay? Now, it doesn't matter if you trade time-based, volume, or tick. You just have to be able to visually spot these order blocks on your charts, all right? But again, I particularly like to trade range-based charts because to me, they're just clear to the eye, and I find that there's opportunity or more opportunity to take trade entries, okay? Now, I'm narrowing down how many trades I take, because I believe about, quality over quantity in a sense. So I'm looking for higher probability order blocks on my charts when it comes to trading futures, and that's what we're talking about, trading futures. But you could also, if you're a Forex trader, or you trade any other markets out there, same thing. Order block trading or supply and demand zone trading is universal, okay? But I'm going to show you how I draw my actual order blocks and how I go about spotting them on my charts. But I always start and look at a higher base chart first and foremost, okay? So this video is for those that are trying to figure out the correct way of drawing an order block, especially when it comes to trading, say, for example, the NASDAQ futures. So let's take a look here. One thing I always like to talk about is structure of the market, being able to identify what the market is doing first. Are we bullish to the upside or bearish to the downside? And that all comes from being able to see and classify, is the market continuing breaking structure up, or is it breaking structure lower? Okay, so we can see, over the last few days, if you look at the NASDAQ futures chart here, this is a 120 range chart. This is my go-to chart, particularly when I like to draw up zones. Sometimes I will draw my zones off of the 60 range chart as well. But I'm using the 120 today as an example. What you see is the market is making moves to the upside, where it's been breaking structure and breaking highs as each time it pushes higher, it makes a new high. Now, on July the 12th, okay, what we saw, not the 12th, I'm sorry, on the 11th, okay, this happened around, let's see here. The market started to make a run to the downside, all right? We got a significant or a decent sell-off on the 11th, which was Thursday, all right? So as the market was moving lower, what we could see it doing is what? Breaking through areas of structure. So when you see the market breaking structure to the downside, then your mind should start to shift and say, okay, we're possibly approaching or into a reversal to where the market is now moving lower. But, if you look at maybe a higher base chart over, say, the 120 or whatever charts you trade, the market could possibly still look bullish, okay? So, what I like to always tell people is to trade in the direction of whatever your higher base chart is moving. So if your higher base chart is still trending to the upside and you haven't broke through any area of significant structure, then continue looking for trades to go long. But on the 120, this is the example of, again, we're talking about drawing the order blocks and being able to identify and locate order blocks on our charts. So as the market was pushing lower here on the 120, it broke structure to the downside. And each time that it pulled back and broke lower, we were breaking structure lower. So this block right here, as you can see here, once I identified that we were moving lower, and as you can see, we're below the VWAP, okay, the volume weighted average price indicator. Again, I've said this in many videos that I'm not using it as an indicator to get me into a trade. It's just kind of like a guidance or a tool to use. If we're particularly below it and we're breaking structure, I like to look for the market. I like to look for order blocks or supply and demand zones to go short. If we're above it, then vice versa, going long. Now, I drew this block right here at the bottom. As you can see here, this is a supply zone or a supply order block. And I'm just going to show you an example of how I drew it. The market, when it pulled back to it, it didn't tap into it 100%. So I like to see full on taps where it's pulled back to a order block, in this case here, a supply. Okay, so, but it didn't tap it 100%. But the way I like to draw it, I'm going to remove this right quick. I'm going to show you, all right, is, give me 1 second. My chart is kind of acting weird here. Let's delete this. And I'm going to go up here and use the drawing tool or rectangle tool. And I always like to, in this case here, this is a breaker structure lower, okay? We want to look for the last up green candle when we're looking for supply zones to go short from or order blocks. So right here at the bottom right here, you can see the wick of this candle here, the last green or bullish candle to the upside. I like to draw it from there and then normally to the top of that candle, that green candle. But because we have a bearish candle here that broke above with the wick above that last bullish up candle, I want to include the wick of that bullish red candle, that bearish red candle as well. So I'm going to draw it from the top end of that wick down to the bottom end of the wick of the green candle. So the top end of the wick of the red candle to the bottom end of the wick on the green candle, and then drag it out. As you can see here, we got a small little gap right there where it didn't 100% tap. Okay, now that's how I actually draw the zone. Now, how do I spot or locate these order blocks? It's in reference to high probability setups. High probability zones or order blocks are ones in which I notice where the market pulled back. Okay. Where it broke structure to the downside, but it didn't immediately pull back and close the zone back at the bearish order block. Okay, so when it pulled back to this zone right here, it didn't tap into it, but as you can see, there was a gap right here. So lots of people have a hard time understanding that piece about the gap. So I'm going to show you right quick. If I remove the actual bearish order block right there, I'm going to draw out the gap. Okay, the bearish gap right here from this order block right here. So we have right here, I draw it and from the bottom portion of the bullish candle right here. All right, the last bullish candle to the upside. As you can see here, this red candle, okay, I'm gonna mark it like this. This red candle, which broke below, okay, the order block, which I had drawn up, it left a gap from the bottom end of that bullish candle to the break or in close of the bearish candle that closed below that bullish candle to the upside. Okay, so the next candle right here, you see the next candle, this candle closed, broke below the last bullish up candle. Okay, broke below it. It didn't immediately come back to it. The next candle that actually formed and closed, it didn't pull back and close the gap there, back up to the bottom portion of the green wick. It continued pushing down. Then it eventually came back and maybe it filled in maybe just to the top end of that bearish candle right there, the top end of it, but it didn't still fill the gap. This zone notates the gap left behind again at the, okay, bearish order block to the downside here, the bottom end of the wick of that green candle, all right, and the bearish candle that closed below, all right, the bottom end of the wick of that candle, okay? And because it didn't immediately pull back, we have a gap resting right there. So what we look for when it comes to, I'm going to go erase that gap there. That's the gap that I'm looking for, meaning in reference to where the zone, where the order block zone there, that bearish order block didn't immediately get filled in. So we'll go back and draw the zone right here, and we would wait for it to come back. Because it didn't tap into it tick to tick, okay, or tap into it 100%, then it becomes, it's still valid, okay, but it's still valid until we get the tap into it. But we never got that tap into that zone there. But if we did, what I would look for at that point would be, okay, we got to tap into it. It would have filled that gap, okay, back to the zone, which marks it to be a high probability order block, okay, a bearish order block. Then I definitely just look for confirmation, the break and close of the candle on a lower chart. But on the higher base chart, I'm drawing up the zone, and then the strategy when I talk about how I trade, which I talk about in lots of videos here on the channel, that's where I move down to a lower base chart and I look for a breaker structure and a pull back to a supply zone. So if you follow and watch the videos, you probably will more likely educate yourself on how, what I'm looking for, and discuss in the videos. Okay. But anyway, so for example, again, let's look at a bullish order block. Okay. That's where the market started to move in a different direction. Okay. So we shifted up. We started taking out structure over here to the left-hand side of the chart. That's why I talk about look to the left to see what the market is doing. Are we starting to break structure to where we're taking out areas to the left-hand side of the chart to where the market may look, look from moving bearish to bullish. Now, these areas over here, if the market starts taking them out, would be, these are what I like to consider minor structural breaks of structure, okay, as it's pushing higher. This high up here at the top would represent a major structural break if we go up there and break it. But all these swings in between as the market is pushing higher are just minor structure areas of structure, okay? But anyways, as the market pushes higher, as you can see here, it's pushing up, breaking structure, okay? Made a high here, pull back, and it broke above here. So it left behind a bullish demand or bullish order block, okay? So when it pulls back, first of all, what we want to identify, is it a high probability order block, okay? Bullish order block. Yes, it is. As you can see, the last bearish down candle right here, okay? Right here, when the market broke above and created an area of demand, which is aggressive buying, look what happened here. I'm going to remove this right here and remove this right here. This is the actual bullish order block. We'll draw out the gap. This candle here broke above this last down bearish candle. You see that there? All right. When it did that, it broke above. We look at the next candle after that. The bottom end of the wick of that candle did not immediately come back and tap into the top. The top end of the last down bearish candle. So we can draw our zone from here to here and kind of draw it out. When that bullish candle there broke above that last down bearish candle, the next candle that formed, it didn't immediately come back and fill it in. So it left a gap right there. The market continued pushing lower, and this is where we can take our bullish order block right here, okay? Draw it out right there. When it eventually taps into that zone, that's where I move down to my lower base chart, and then I'm looking for basically a breaker structure where the market creates a bullish order block on the lower base chart, and that's the chart that I would use. Say, for example, the 120 on the NASDAQ. If I'm drawing up, again, it's the NASDAQ futures. If I draw up my zone, then I'm going to move down to, for example, my 24 range. I just showed a video on that, and I showed many videos about scaling down or moving down to where you have multi-chart confluence. The market's moving in the same direction on both charts, and it's setting up nicely where we have a bullish order block on one chart, the higher base chart we mark it off of, and then a bullish order block on the lower base chart as well. And that's the chart that I'm using, my 24 range, for example, to look for rejection and get into the market to go long, okay? Because now we're breaking structure to the upside. Even though we're breaking minor structure to the upside, we're still breaking structure to the upside, and it pulls back to this bullish order block right here, okay? And then move down and look for a demand zone or a bullish order block to go long. So we pull back to the area, and that's what I'm looking for. So how to actually draw them, I just showed an example of supply or a bearish order block in this sense here, but this is an example of, again, a bullish one here. In reference to being able to spot them and locate them, you're looking for breaks of structure and to where there are gaps back at the zone, like I showed, okay, where the market moved away from the zone and didn't immediately come back to it, to where it filled in any gap where there was, in this case here, aggressive buying to the upside, the market didn't immediately come back. Aggressive selling to the downside, and it didn't immediately come back. So meaning after the market broke this candle right here to the downside, broke that bullish candle to the upside right there, when it came lower and pushed and broke lower, it didn't immediately come back to it. It continued pushing away, but it tried to come back. It failed to, which left the zone here still valid. But again, sometimes even when the market reapproaches a zone, it took it several hours for it to come back to the zone. And lots of times, if it takes multiple hours or even days for a zone for the market to come back to a zone, it may decide to just kind of push through it, especially if it's turning back around, starting to break structure to the upside, as an example right here, then more likely they're going to try to just go ahead and take that zone out. All right. Why? Because there's liquidity resting here at this zone as well. You have to understand that. Okay. They're breaking structure to the upside, and then they're going to be probably more likely to be looking to take out zone. So just relatively speaking, if you see where there's a break of structure and the market kind of pulls back to it, and it doesn't take that long for it to come back to it, maybe, an hour or but if it takes multiple hours or multiple days for it to come back, then very, very mindful, especially if it starts to break structure back in the opposite direction. More than likely, they're probably going to want to just go ahead and, what am I trying to say? Take out that zone. All right. But again, this video is really primarily to show you the correct way of how, how I go about drawing and being able to spot those order blocks on my charts when it comes to trading futures. So hopefully this helps out a little bit better for those that have questions about that. And drawing the zones is pretty easy. It's not anything hard. Again, you're looking for, if you're looking for a bearish order block, you're drawing it from the last bullish up candle, the bottom end of that bullish candle to the top end of it. If you got a wick from a bearish candle that closes up, that pushes above it, then also include that wick. That's what I do. Okay. If you got a bullish order block, same. It's just everything in reverse of the top end of the last down bearish candle. And if you got a wick of a bullish candle, then include that wick as well. All right. Now, if we didn't have that wick below on that bullish candle, I would just draw it like this. The top end of the on the bearish candle, the last bearish candle to the downside, the wick of it to the bottom end of the body of the bearish candle, the last bearish candle to the downside. But because we have this bullish wick right here, all right, I'm gonna include that wick to the bottom because it actually came down and wick below the body of the bearish candle. Hopefully that makes sense. And then again, if that's the same thing that happens here in reverse of on a bearish order block, then you will be doing the same thing. So just want to show you guys that today. Hopefully that makes sense. Kind of answer some questions. I know people have a hard time on being able to spot and then also draw those zones as well. So hopefully this makes sense to you. But look, if you want to dig more deeper into the trade setups and my discussion of breakdowns, then people always ask about how to become an elite member. There is a link down in the description portion of the video if you're interested in receiving the trade breakdowns, where I go into detail about my setups that I post over in the Discord, most of them, and to where you gather an understanding of what I'm looking for, my mindset as I'm walking through and talking through a trade or trades, about profit target areas, where to place your stop losses, just what am I looking for in taking that trade, what was my thought process. Okay, but anyways, there's a link down in the description portion of the video that you can click on. If you click on it, 2 tiers will pop up, and make sure to choose a choice for $6.99 a month. That's going to give you access. That's a reward or perk that I give back. Basically what it is the YouTube tier membership program. So where you're supporting the efforts of content creators like myself, and I'm giving valuable information back in reference to how I specifically trade in the strategy. So for $6.99, you get the trade breakdowns, the video playlist, and other little videos that I put out that are not made public to the community. So that's you're joining a private community for $6.99 only. Okay, for a very nominal fee. That's not much at all. Most people spend that or more on just a beverage of choice on a daily basis. So you're talking about from a monthly basis, you're getting lots and loads of valuable information about the breakdowns of the trades, which people like to see because it helps them see on the charts what someone else is looking at, okay? And discussion of, where to place their stops at in reference to the strategy and how I trade. So if you're interested in doing so, that link is down in the description. If you're interested in joining the Discord, the Discord is free. You can scroll down to the bottom portion down in the description. You'll see a link for the Discord. Click on it and join. Invite yourself in. If you're not a current subscriber, please take the time to go ahead and click on that sub button. Become part of the community here. I mean, there's lots of valuable information. I'm just trying to make video content because I want people to see and become inspired about trading and become profitable as well. So click on that sub button now. Also, if you make sure to turn your post notifications on, okay? Please do that so that you don't miss one of the uploads. But last but not least, if you found value in today's video, please drop a like on it. Take care. See you in the next one.